Welcome everyone to the Macro Cafe episode 25. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, tonight I'm going to take a look at something a little bit different. Usually when I present the Macro Cafe, I take a look at intermarket relationships, I take a look at breadth, I take a look at sentiment, and I try to give a perspective of what's going on in the markets and kind of where we are, and if there are anything interesting in there that can tell us, what's happening underneath the surface. If you lift up the hood and see, if there are any clues regarding the market behavior overall. But tonight I'm going to do things a little bit different. I'm going to mainly focus on Elliott Wave counting. I haven't done videos on Elliott Wave in a while. I have a very wide library of videos on YouTube there, and you can check that out. There is I think tens of videos there about how to trade, complex structures, fibs, diagonals. There's all kind of things there that are interesting, and you can go through them and learn a lot when it comes to Elliott Wave. But tonight I'm only going to focus on counts, and by the time I'm done with this video, you're probably going to be tired of just watching Elliott Wave. It's going to come out through your ears. So that's what I'm going to focus on. I'm going to focus on Dow Jones, the Nasdaq, Russell, S&P 500. We're going to take a look at ARKK, Commodities. You're going to take a look at Semiconductors, 10-year yields. Look here at 10 ETF, so just solar, Apple, Tesla, Etsy, gold, Nifty 50. We're going to go through everything and explain what I see in these markets and what I'm, kind of how I'm digesting them by using the wave principle. So that's what we're going to focus on. You can find me on Twitter. Okay, you can come up here, and if you want to start a conversation, if you have any interesting charts, anything you want to say, or if you're curious in what I have to say, you can come here and type in Elliott Cafe, and you can find me fairly easy. Go ahead and subscribe to my Twitter channel. I wanted to try to grow this kind of following and get our community growing. You can also find me on my private trading room. You can use this link to get on there. There is a trial also. There's a paid channel with videos and updates on macro assets and Bitcoin and altcoins. I have multiple things that we talk about every single day on there. If you want to learn about Elliott Wave, I think it's the best place to do so. There's a 7-hour course that take you from the beginning to the end in how to learn Elliott Wave, top to bottom, and then by using my daily videos and charts, you can get pretty proficient at Elliott Wave. So that's my plug for the Pro Room, and let's get started. Let me get out of here because this is from last week. I'm going to go into my MotiveWave platform. This is the platform that I use on a daily basis, day in and day out, to count my waves. It makes it very, very easy. There are, you can also do automatic counting with this. A lot of guys, like to do that. I like to personally just kind of go and take the waves and place them on here. But there are, you can do, multiple counts and alternates, and you can save them up. You can share them with people. There is, there's also an interesting repository feature in here that if you want to kind of link your charts to my charts and see kind of what I'm counting, those automatically appear on your platform, and that's done through the repository link. If you remember, that's fairly easy. So anyway, what I want to do is I want to cover, so this is the MotiveWave platform, and I want to try to look a little bit at what's going on in these markets. So let's start with Dow Jones Industrial, and without even placing any waves in here, what you can see is a price action that started at the beginning of the year, and it's been going obviously in a downtrend. But what's the number one thing you see? You see a bunch of overlaps. And, one of the main ways to identify when you are in a correction is by seeing a bunch of moves here that are up and down and overlapping each other. This tells you right here that we are correcting. We are in a correction. We are in a bear market. There is a corrective type, and it's, all the bear markets are corrections, right? Because they're going against the primary trend at a larger degree, but some of them are more pronounced than others. Some of them are more aggressive. This one I think is fairly controlled. It's contained nicely between the parallel lines. You can see the overlaps in here, and I can just put a very simple and basic wave count that it's probably going to be similar with a lot of the things that I'm going to show you. And I'm going to take, let's say, a combination out of there, and we can go here in a very simple, so ABC. So you can go here in a WXY right there. Okay, so this is the first part of the correction. You go ABC, then up in X, and then another ABC for Y, then you do another ABC for another wave X, and then this could be the wave Z in here. So it's a more of a kind of a double zigzag or some kind of a double tree, depending on how this Z wave unfolds in here. And the way I do that, I mean, you can also kind of get them from here, right? I can get a triple combo and then just place it instead of this. I just have some shortcuts that I use. So that would be a WXY. I will place an X there and then a wave Z. So you can see in here that this is pretty clearly an impulse, and I'm looking at this as a move in the direction of the larger trend in Dow Jones, and this as a move that's correcting this uptrend since the pandemic lows in 2020. So the question here is, and everybody asks, is this over or this is not over? And as much as we would like to know exactly when this correction is over, it's very hard to pinpoint that, right? No matter what method you use, I mean, you have to kind of be Nostradamus to find out exactly when something is going to end. But what Elliott Wave helps us with, it's identifying that we are in a correction and we need to wait for this correction to give us signs that it's complete. And, you could have said very simply that this correction, finished over here. But instead the market went higher and then dropped again. You could have said when you made this low and you started to push higher a little bit, you could have said that this correction is complete over here. The markets went higher and then sold off again, right? Now with the same maybe degree of accuracy, you can say that this correction completes over here, right? And then the market could go up like that and then drop over one more time. So, I know this is not really helpful, but the way to find out if the correction is complete is actually to start to overtake some of the swing highs that are in this decline. And if that means waiting for those things to happen, then maybe that one needs to be done. A lot of people will try to kind of pick some of these levels at the bottom here, myself included, right? Because when you use Elliott Wave as your kind of primary analysis, you're kind of always looking to be counter the move. So you're going to try to find a wave 5 top. You're going to try to find the end of an ABC correction, the end of a WXY, and so on and so forth. I mean, I think it's wired into the kind of the psychology of Elliotticians here, because they are going to identify corrections and try to position themselves for the next move to the upside. And then, a lot of them have a different style. They're more risky and they're trying to, not necessarily wait for a lot of confirmation, just kind of jump in every time they see an equality or something. They are, jumping in and trying to take advantage to get as good prices as possible. Others are waiting for a little bit of confirmation to the upside, a 5-wave move, a prior swing high, whatever those are. And that can help you identify. So, that's why I'm talking about this, because, as much as you would want to think that this is the low of the market, right? There is no evidence yet that that's the case. Let's say that maybe a first sign would be if you at least start to get above 32,500, right? That would be an important point. But here is what happened last time we've got it, above a swing high right there at 33,272 in Dow Jones. So you went up here, you touch top of the channel, and then you come crashing down, right? So it was an interesting indication that something could be afoot and you could start to push back to the upside, but you failed to build a fourth wave in here, right? So you have a wave 1 and a wave 2, then you have a third wave, but everybody was waiting here for the fourth wave to form, myself included, and then never came, and the markets started to crash lower, and we overtake this low. So, you know, it's back to the drawing board, right? The correction wasn't finished. The question is it finished now? What are we going to look for? So again, you know, first of all, I'm going to be looking to see if I can see some kind of an impulse out of here. Then I'm going to look to see if we're going to be taking 32,504. Then, you know, one of the most important signals would be to overtake this X wave in here at about 34,281. And by the time this happens, a bunch of the moving averages will start to turn, a lot of the indicators, a lot of the breadth, a lot of the markets will start to participate. And it's possible then, you know, once that's done, that would be the first signal, even if you might have some pullbacks after that, right? That by overtaking the swing high, it's likely that we're going to continue to push to the upside. Otherwise, you know, you're running the risk of being run over. What if this is incorrect and there is, you know, something else happening in here that we're not fully aware at the moment, right? Could be some, let's say a wave 1, 2, or some kind of a leading diagonal in here with the second wave, and then you're crashing much, much lower. So that's why we have to be careful, kind of how we look at, you know, at this kind of corrective process. But, you know, for all intents and purposes, I mean, the number one thing that I like here is the fact that we have a lot of overlaps. And to me, that is a corrective move. So, you know, is it a WXY, XZ and you're done? Or this is wave A of a wave Z and you have a WXY, X, and then you have an A, B, and then down in C. And that's why you need to wait for some of these levels to get taken out, because then it's going to be less likely for that to be, you know, another B wave. And you can only have so many X waves, right? Usually we're getting 2. 1, you know, which is more likely, and then 2 when you're starting to get more complex. If you're getting anything more than that, things are starting to look, you know, a little awkward, and you know, we have to kind of combine some of those, either maybe a triangle in the middle or something where we would make it a little bit, you know, a little bit larger. So another thing I wanted to point, and here I am talking about Dow Jones only, and I have a lot to cover, so maybe I'm not, you know, really good with my time here, but you know, I'll go as long as it takes. If you're looking at this number in here, this is the 61.8. It's a 618 fib retracement on an arithmetic scale from this low to this high. So that's where the market, and you know, this is kind of where you would see usually wave 2s. Kind of, if this is a wave 1 and a wave 2, then that's where we would kind of have you know, a very important, let's say, reversal point in Dow Jones. Now, it doesn't have to go all the way back there. It can stop at, obviously, at 50%. But, you know, I just kind of put this on the chart to kind of give you an idea that that could be, let's say, another maybe 4,000 points to the downside in case we're going to get an A, then up in B, and then down in C to kind of make this correction a little bit bigger. So I'm just kind of putting that out there. But look, very nice bounce out of this at the bottom of this kind of channel in here. You know, we pull back for the past couple of days, and we'll see if they're able to kind of return out of here. We have some inflation data next week, and that will be a next catalyst for the market. Now, enough with Dow Jones. Let's take a look at NASDAQ. And, you know, this one I already have the labels placed on, and I can start over with the 1 week chart where you're very familiar what I'm looking at. Let me go to a 2 week. You know, 1, 2, 3, 4, 5 for the 1, flat in a wave 2, uptrend, and another 1, another 2, and we go on with our lives, continuing to buy these, you know, great companies that make money, that develop products, right? We're trying to stay optimistic about the future, and we're considering, you know, every once in a while, the Fed, you know, stretches the band and throws a lot of money at the economy. We get a pandemic, we get a sell-off, we get a recession, we get an inverted yield curve, things of that nature, and markets correct. And this is one of the largest corrections we've had in a while, and it continues. And the way I kind of have this labeled, it's a little bit different than what you saw in the Dow Jones Industrial, because this looks a little bit better as a 1, 2, 3, 4, and 5 for the wave A, then up in a wave B, then another 1, 2, 3, 4, 5 for a C, A, B, C, and then now what? Let me go to a daily chart so you can see it a little bit better. Same thing, I have 10,589 as a 61.8 fib retracement for a second wave. We're very, very close to those levels, which is, you know, which is quite interesting. But the decline and, you know, the internal of these declines are like this: 1, 2, 3, 4, and 5, up in B to the prior fourth wave, 515 to 65, then another 1, 2, 1, 2, 3, 4, 5 for 3, up in 4, down in 5. This completes the first ABC. So the first leg of the zigzag, we will label this W. Then you go up in an ABC, up in an A, B, and then up in C for an X wave. So you have a W, X, and now the question is this an A, B, C, or, and you're done, and you complete already a wave Z, just like I've showed you before, right? Let me just pull that one more time. This is just a simple combination. Let me just put it on the chart, why not? So W, X, Y, like that. There you go. And then we're getting the labels are changing as well when I'm doing that. You can see in here how the software automatically changes the degree of where we are. Minute, then minuet, and then you go to minor and all of that. So now you're having the wave Y from the second, and the question is this a wave A, B, and then 1, 2, 3, 4, and 5 for a wave C, or this is better interpreted as a 1, 2, 3, 4, and 5 for a wave A. So this would be like this, in a wave A, B, and then C. You can get a B wave like that, and the C wave doesn't have to be that big, right? And you're coming like that. All right, so you still get a little bit of a rally, and then come back to the 618, 10,589, and then you climb out of there, right? So a couple of ways to kind of look at this. If you ask me for proportion, this maybe look a little bit better, right? But, you can always just finish right here and then continue to bounce out of there. And again, what am I looking for? I'm looking for some of these levels to get taken out, 12,752, and then I'll be confident that, let me just kind of get that. I'll be confident that this correction is over and we're ready to move to new highs. So, want to pick the lows in here, be my guest. It's a dangerous one. I mean, you're at the lows here, you're at the bottom of the channel, but things can always fall apart and you can begin a much larger decline. So it's better to kind of go a little bit with the uptrend, wait for the market to turn a little bit in here. And if it's just a B wave, right, it should be just a 3-wave move. That would tell you that it's likely a correction, and then it's going to be followed by another decline lower. So it matters how we rise from here. So this is the NASDAQ. I'm going to go into the Russell next, and that's a very similar story, although just a little bit different. I mean, look at this. I look at this move out of here. 1, 2, 3, big move in 4, right? Super complex correction in here, a big triangle, and then a very short move up in a 5th wave. That completes wave 1. We're coming back in a wave 2, and it's a similar story. You go in a wave A, B, C, right? Just a little bit of a shorter X wave. This is not, it wasn't that aggressive as you saw it into the NASDAQ and in Dow Jones, right? You could see it in here that it's more, it's kind of more sideways in here. And that's the connector wave. So ABC, first zigzag up in X. And then another 1, 2, 3, 4, 5 for another wave A, up in B, and then down in C for the wave Y. Look at the proportion in here. Beautiful proportion between wave Y and wave W, followed by, well, last time I looked at this chart, I think the markets were climbing and I was waiting for the 4th wave, just like everybody was waiting to see if this is going to turn out being an impulse. And that's how you find out, if you're wrong, if the market is doing something else. It's obviously if it's not behaving the way you think it should behave. And this is where Elliott Wave is so powerful, right? It tells you where you should be in the sequence, and if you're not, then you got to change your approach. You got to look at something else. You got to know, hey, things are falling apart here. This is not working the way it's supposed to work, the way I thought it was going to do it. So that, I think that's a very good message, a very good signal. I think it can save you a lot. So anyway, we were waiting for 1, 2, 3, 4, 5. That never happened. And instead, all we've got was just a very basic A, B, and then, sorry about that. Let me go grab that. There we go. All right, you shoot it all the way up there, silly. All right, let's go back, and you'll find it right here. So this will be the next X wave, and this. So now we have to change, right? I would have to bring the WXY, XZ one more time. Let me see. Did we make a new low in here? No, we didn't, right? We didn't overtake the lows in the Russell, right? We're still above because the Russell 2000 is actually acting a little bit stronger in terms of its relative strength, but still, we might make it next week, or even if we're not, it could be maybe a truncated move. But this is kind of how I'm going to do this. I'm going to go up here and get again my triple combo. And what I'm going to do is I'm going to delete the WXY. So I'm going to delete that, and it's going to ask me, would you like to remove them, the child waves? No, we're going to keep those child waves, which are these. And then I'm going to take this and connect them. So I'm going to go here as 0. Then we're going to take the W, that's the first child wave, so ABC for W. Then we're going to go in a wave X. Then we're going to go in ABC in a wave Y. And then we're going to do a wave X in here, and then another wave Z. And if you noticed, I have a wave 2 doesn't belong there anymore. It belongs back here. So I have to connect it with a 2. And here we are. You already have the structure in here. That's already done. And do I have a fib? Let's see. Yes, it's 1536. This is the 618 retracement for the second wave from the top in here. So now, again, the question is this done right here? Right? Do you have already a WXYXZ, or, you know, are we waiting for something a little bit deeper and you still have to correct a little bit more like that in a wave A, B, and then allowing in C for a wave Z, and just kind of make this a little bit more. You know, hard to tell. We're never going to know, right, until it's already done, but I know what I'm going to look for. I'm going to look to see if this market starts to climb out of here, and if it does, one level, another level. Right? If we start to climb about these two, then I can say maybe with a high degree of confidence that this correction is probably complete and we're ready to move to the upside. So no point in, you know, trying to fight these lows. No point in necessarily finding out where this is over or this is not. I mean, it's not a contest. You're not going to get a statue for this placed anywhere, right? But you know, it is what it is. I mean, we all like to kind of say, yeah, it's done. You know, I love it. Let's go from here on out, and it's over. How about we let the market tell us and see what happens? So this is the Russell. I'm going to take a look at the S&P, and you're very familiar with this count because I've worked on it last week as well. So this is again flat in a wave 2. Then we're looking for another 1 and another 2. Top of B wave as support comes in about 33.93. Couple of hundred points more than 3200, where a 618 pullback will be on the arithmetic scale between wave 2 and a wave 1. So 3200, which coincides with the bottom of this channel in here. So if I go to the second, to the daily, 1 day in here, you would see. So same story, ABC, X, ABC for Y, double combo up to here, then up in X. And then again, ABC is this wave Z of 2 finished. Or are we looking for wave A, wave B, and then wave C into 34 to 3200, right? That's the beauty. That's the beauty. And that's why the corrections are so messy and so crazy, because, you know, they just drag you along, right? You get a fake rally, or you get a, they call it a bull trap, right? It's nothing else, just an X wave or a B wave. And then they correct a little bit more. So always, if there is a lesson from this video, always take your time with the corrections. Don't rush them. They can extend a long time, and they can, you know, take their sweet little time, and they can, from a simple zigzag, you know, a double zigzag, or you can get a double 3, or a triple zigzag, or a triple 3, where you're going to get, you know, let's say, I don't want to go into all the details on the triples, but you can get, for example, a zigzag, you can get an X wave, and then you can get a triangle. You can get a zigzag, you can get a flat, you can get a triangle, and then you can get a zigzag or something like that, right? So you can, there's a lot of combinations that happen in complex corrections. And number one thing is to look for those swing highs to get taken out, because usually, you know, very rarely, you know, you will get the second X wave to kind of pass. Even X wave in here, right, usually stops at a B wave. You know, if it starts to go too much, then it's likely not an X anymore. Okay, so every once in a while they will pass, and we have to be careful, right? You got to wait a few days and make sure that you're not actually falling apart. And in this case, you saw you break above the X wave, and then you start to crash lower. The second X wave was not able to travel as high. It traveled above the B wave one more time, right? But not above this X. And then you started to turn lower once again. So this is the S&P 500. And we're waiting to see what happens here. What am I going to look for? Exactly what I've showed you, right? Let's see if we can get back above this level. It's 4,200. And then let's see if we can get back above 4,300. I think this one is too premature. It will be a sign, but you know, it's too low for me to start to consider it something serious. If this turns into a 1, 2, 3, 4, and 5, right, and I see a nice impulse higher towards 4,200, and break the trend line, then we can say, yeah, I think things are turning and this market is ready to go bull. Because if it goes bull, it's got plenty to go. Guys, let me just take a sip of coffee and I'll be right back. All right, I'm back. All right, let's take a look next. ARKK. So ARKK, it's an interesting one. This thing was obviously rallying during the pandemic, and I mean, it corrected here at 33. I mean, obviously started back below 20, and that was the low in March of 2020, and then it went up here all the way to 159, 160. And it's been in a complete crash mode since then. Basically, we're coming back all the way to the pandemic lows, right? Everything got punished, and maybe this was all due to the monetary policy and the fiscal stimulus and all of that. Who knows, right? But all these stocks had huge extreme valuations. People were going crazy about the bull market, and it ended up in a little bit of a pain in here as this market's correct from 160 back to 30. Beautiful support level in here. You can see it starts back in 2018. End of 2018, March 2020, then we're resetting it here in the summer of 2022, and here we are in the fall one more time. And the question is, hey, what's going on with this? Are we done? What do you think about this move? I thought I had a couple of ways. Maybe I'm hiding them out in here. Let me see. On the daily, no, I don't. And I think maybe one of the reasons that I've deleted them was because there's a couple of ways to look at this. And I mean, it's obviously we're at this big support in here. So one thing that I'm noticing and what kind of helps me identify where we are in the sequence is I'm looking for the longest wave. And once I see that being, super strong, and I mean, this was the meat of the move. This was the capitulation move, right? This is where everybody kind of got knocked out of the position, including, a lot of large investors that capitulated right here from these levels, from 50 all the way down to 30, right? So this was wave 5 of this entire decline in here. So, I mean, if you want to go, let's say, in a wave 1, 2, 3, 4, and a fifth wave in progress, you're still going to get a pretty big ABC correction next. If you want to do a wave ABC for a W, then you go, up here in an X wave, and then you go ABC for X, and then you go in another ABC in here. You can do a WXY. It's very deep. It's probably not what it is. But the message that I have in here for you is that the wave 3 in here is done, right? And whatever happens right now, it's a fourth wave, which means that either this is a fifth, or there is another sharp drop coming, a short drop in here, and then you're rallying. So we're towards the end of this move. I mean, I'm getting, you're getting divergence in here. I think, ARKK and some of the stocks out there are showing you relative strength versus the rest of the market, even though we pull back a little bit more. But I like it. I mean, we're at a big support in here. A lot of people will say, how about the head and shoulders? I mean, okay, this is the right shoulder. This is a big head in here. And hey, maybe you go sideways. Maybe you go sideways for a long time. You go something like that, something similar to here. You just kind of bounce up and down, and maybe you create a larger fourth wave. Then you get one more move lower, right? In the beginning of, middle of 2023, say you go sideways until then you create some kind of, nasty triangle in here. You break lower one more time, and then you push to the upside. So the message in here is, kind of take your time, be patient. If you're starting to break above 50 in here, I think it's likely that this correction can continue up to 72 and maybe even higher. All right, but that's kind of what I'm watching in the ARKK, and Elliott Wave here helps me identify that a big portion of this move is pretty much done, and you can kind of count this, right? You can kind of see 1, 2, 3, 4, and 5. So that's where we are. I mean, if this is like I said, a WXY or an ABC, really hard to kind of tell that right now, but the message is clear. We're probably correcting, very small move down and then up or straight up. So we're towards the end in here. Okay, let's take a look at DBC. This is the commodities, and I've watched this for a while too. And I mean, look how cool this looks. 1, 2, 1, 2, 3, 4, 5 for 3, down in 4, and then 1, 2, 3, 4, 5. Right. So just a beautiful Elliott Wave pattern moving in here. Right. 1, 2, 1, 2, third of a third, 4, 5, 4, 1, 2, large third, 4 and 5, and now you're correcting. And here is the story, right? Remember how I showed you just before in Dow Jones and Nasdaq and Russell? I mean, look at this little correction, okay? Look at this thing. I mean, is this going to correct everything that's here? This whole move? No, it's too small. If this is indeed, a fifth wave of this larger degree, of the primary degree, right, and we're waiting, let's say, a B wave or a large second wave in here before the next commodity cycle starts or whatever, right, we're looking at this correction to take a long time, man. Like, it could come all the way here towards 18. It could take, maybe the entirety of 2023, and it can look something like that, right? You go in an ABC in here, and then you go up in an X, and this is what usually happens in here, and that's why I'm not bullish commodities. I can be. Once you drop below this fourth wave in here, you've done, a pretty impulsive move of the highs in here. Truthfully, yeah, so far you only have an ABC, right? And then watch for here. Watch for the next wave right out of there. Maybe it's going to go here. Maybe it's going to go a little bit higher towards the top of this channel. And, if we start to fail up there, then bam, one more time lower. Opportunities to short this market come once you get back towards these levels, right? And then we're looking for more lows in commodities. If you start to break above this wave high in here, then things are starting to look different. That means that this wave count is wrong. There's probably then, another fourth wave at a smaller degree. Maybe this primary wave belongs there and you're still making a new high, but you're running towards the end of this move anyway, because you've already done the big meat of this move right here, right, in the commodity. So there's no point to force this any more than what it needs to be. And this is showing you that we're probably correcting. So that's kind of how I'm looking at, how I'm using the Elliott Wave to help me out where I am in the sequence and what I need to do with this market. Okay, from DBC, let's go and take a look at SMH. Where are you? Why don't I have my count? Where's my count? Yeah, so I found it here. It's pretty much the same like the rest of the markets. You have in a W, you go up in a wave X, and then you go another ABC down for a wave Y. You go up in X again, and then you're starting to come lower, either in an ABC or A, B, and then C. But here's what's interesting. The 618 pullback, for the fib, it's basically at 181, and we're sitting at about 185. So very high chance that we're probably trying to finish up this correction again. We're going to wait for the price to kind of tell us that, and let's see if we can climb back above 218, and let's see if we can climb back above 247. When these two levels get taken out, then we're getting bullish again. So this is just the semiconductors. I mean, you can see Nvidia getting hit, and a lot of these are not looking too well. We'll see what's going on in the earnings season in here, but they've been kind of hurt. And SMH here shows you, and I use different instrument ratio as well to kind of find out who's stronger. And I mean, look, SMH is weaker than the S&P 500. I mean, that's the ratio, SMH versus SPY, and it's not looking that strong, and it's hard for the markets to rally if you don't get semiconductors. I got some other ratios here with XLY and XLP. In here as well, I talk about this ratio in the previous macro cafes, where I'm watching what's going on in the consumer discretionary sector versus the consumer staple sectors. And if this ratio, it's not pushing down, that means that people are still excited about, some growth and things like that. So, I use those ratios all the time, and they're down here, in my indicators list. All right, so SMH, and then let's take a look quickly at some yields, because, listen, you might not be interested in bonds, but I think if you like Elliott Wave, even though on the yields it's a little bit harder to do, but it's a big market. I think it's warranted to pay attention to, and see kind of what Elliott Wave is telling us. Basically, on the 10-year, right? We've come, a lot. We're trading, we went above 4% in here in yields. We all know the story with the Fed and what's going on in here with with the increase in interest rates, right? And they have a meeting in November, and they're probably going to raise another 75 basis points. But I mean, look, we've blasted through some of these resistance levels. We stopped a little bit about 330 because it was the high back from 2018 in here, and we came back, we corrected a little bit. Now we're back towards highs that we haven't seen since 2008, 2009, 2010. 2008 or 2010. I mean, these were the resistance levels back then, and here is where we are right now. We got to look back, you know, whatever, 20 years to kind of find something like that. So it's not 20 years, what, 2008? It's 14 years, right? What am I talking about? So, you know, here is where we are. And I mean, look at the impulse in here, right? Nice impulse in here. I think this is a wave A. Then you come down in a wave B, and then you go in a 1, 2, 1, 2, 3, 4, 5 for 3. Then you come down in 4. Pretty good equality between this 4 and 2. You know, not a lot of alternation, I must say, but that's okay. That's just the guideline. 1, 2, 3, 4, and 5. And between 5 and 1, I mean, looks ideal for this wave in here to be near completion. We're not at the top of the channel yet, so hey, listen, if they wanted to climb a little bit more, they can. I don't know what's going to happen to the markets if that happens, but you know, that's kind of where we are. And you might say, why do you start the wave count from here? Right. Well, the reason I do that is because, at least on the 10-year yields, I think that this move back here was part of the entire decline. And I think the decline in here was probably a wave 1, a wave 2, a wave 3, a wave 4, and a truncated wave 5. I think this is what happened, and that's why this move was so sharp. Right, a larger third wave, and so strong that it needed a bit of time to consolidate in here in an ABC, and then, you know, it dropped over one more time. We never come to these lows, and that's how created a fifth wave, truncated. I think that this is what's going on. Otherwise, you know, you got to go, just like I'm going to show you on the 30, that's an ABC. For a W, that's an X. And then, you know, this does not look like an ABC. I mean, you can get an AB, but it's very ugly unless this is A of, you know, of wave Y. So you go A, B, and then still up in C. That's why I like to count this like that, because I think, you know, this kind of messy move that happened in here, I'll show it to you. This was a fourth wave. And then this drop in here was, you know, you get an A, then a triangle in B, and then up in C. So you go A, B, C. For the fourth wave, and then you drop lower in fifth. That's kind of how I'm looking at it. And here is and you know, I mean, go ahead and study this. It's TNX. You can find them in a lot of places. And you know, this move in here is very interesting. I mean, you know, very nice, very nice. 1, 2, 3, 4, 5 for wave 1. Even in the subdivisions, 1, 2, 3, 4, 5 for 1, down in 2, 1, 2, 3, 4, 5 for 3. So 1, 2, 3, 4, and 5. Now you're coming lower and you're doing a 1, 2, 3, maybe a 4 and a small fifth, and it should be done with this yields, which should help stock market stabilize and probably push to the upside. So maybe a final move up in yields, maybe a little move down in stocks, and then we can reverse. But let's just wait to see what happens, right? We're not going to tell this market exactly, you know, when to reverse, but watch for signs. And obviously for me, you know, one of the signs would be a break below this low in here, right? This fourth wave would tell me, you know, although if you see yields back at 250, that's going to rip the market. But that would be one way to kind of start to get a little bit of a correction, or maybe, you know, even a deeper pullback. So you would go in an A, then up in B, and then down in C, and things will look something like that in the yields. Okay, so then you short the B wave and look for the C wave decline. But that's the, you know, until you actually start to kind of come back, let's say below 325 in here and you know, approach 4, it's hard to tell that this is, you know, rise in yields, it's over, right? Because you're still in a big uptrend. But that's kind of, I mean, in terms of the sequence, to me, it looks that it's near completion. And then here's how it looks on the 30-year. That's a little bit different. I've started the count from those lows. Oh, I hide my yields. Okay, so here it is. You know, starting from here, right? You know, A. Then this is what's interesting. I mean, look at this. Look at this interesting triangle in here, right? So you go up in an impulse in this wave A, then you come down in A, B, C, D, and E. This whole thing here is a triangle in a wave B position. Then you go up in a wave C. You can see it 1, 2, 3, 4, 5 for C of W. Then you come down in an X wave in an ABC for X. And, you know, then you start to climb higher in this wave A, down in B, and then in the final stages of this C wave, again, just back to some levels in here, right? From, you know, this is from 2000, 1999, 2005, wherever this was. 2011, back in 2014. So I think it's an area where the market, responds at this 4% yields in here, right? And if you want to do a WXY, I mean, that's fine. If you have something, different idea, that's okay too. But I mean, the structure here, that's the biggest meat of the move. Then you're pulling back and then you're climbing higher one more time. RSI, it's still okay, little divergence in here, but still very strong yields in here. So again, I'm not gonna argue with it too much, but coming into this big resistance level, looks like this move in here, it's probably near completion. You have a 1, 2 in here, 3, 4 and 5, 4 and 5 maybe, so maybe just a touch higher, but I think we're running towards the end, and then probably going to get a pullback in yields here back towards 350. Okay, so that's kind of what I'm watching. I mean, markets can always laugh in my face and say, screw you, I'm going higher. Very possible. That's why we got to wait for some signs from it first. All right, so this is on the this is the 30-year, right? The one before it was the 10-year. TYX is the ticker for the 30-year yields. All right, let's continue to go in here. I'm going to take a look, and I don't want to go to, these are bonds for, high yield bonds and risk and junk bonds and corporate stuff and TLT. TLT actually is very interesting, and I forgot to put this on the list, but so this is, the ETF, the 20 plus year ETF, that if you want to buy bonds, this is the way to kind of do it. And, in a IRA account or in your brokerage account or whatever. But I mean, look at this trend line in here, right? And big drop. So if the yields are topping, then the bonds are bottoming. And, what better place to do it than from this trend line that's in here? So I think these are decent levels to get some TLT, man. And then try to look maybe for a bounce back towards 120. Again, if you want to wait, right, for a little bit of confirmation, then wait for a move back up, right, and just kind of then buy the pullback. So you wait for the 1, 2, 3, 4, 5 out of here, and then a little bit of a pullback, and then start to accumulate for a push, a little bit higher. We don't know how high it's going to go, but I think that you can target. I mean, if I put a retracement level from this to this, right, 38% towards 125 would not be a bad idea. Right, that's a pretty decent move. So let's see what else I got in here. Okay, we talked about SMH because I lost that count and I found it, and then I want to talk about 10 a little bit in here. This one also an interesting count, I think. Let me see, guys. I hope you're still with me. Looks like a wave 1 cycle, wave 2, 1, 2 in here. So this terminated in 2017. 1, 2, 1, 2, then large third of a third in here. Okay, back to 78.6, large third, intermediate, and then again, just another messed up complex fourth wave in here. Let's take a look and see how it looks. So 1, 2, 3, triangle 4 down in 5, completes a wave A. You go up in a 1, 2, 3, 4, 5 for A, down in B, up in C for a B, and you come back lower for that. Okay, then you come back lower for a 1, 2, 3, 4, and 5. And this is where I have a little bit of a problem. Like, I was thinking about this, in here, but I think that this fourth wave belongs to this, to this structure in here. 1, 2, 3, 4, and 5, because we're making a new low, and I don't think it's an ABC. I think this is a fifth wave, and there was a fourth wave. It was a very short second, a little bit larger fourth. And if you look at this, you probably can see, 1, 2, 1, 2, 3, 4, 5, 4, and 5. That's what I think. And then here, you try to rally, so you're saying, okay, this correction is over right here at about 55, 54, right? And you never pass above this B wave high. So what is this? Is this another X wave? Right? So A, B, C, X, ABC, and you're still trending lower in the solar ETF, because so far it only displayed a 3-wave move. In an A, B, 1, 2, 3, 4, 5, I mean, that's pretty clear. Right? I think you can see it. A, B, and then, okay, I'm not looking for you to climb all the way up there. Okay, let's see here. All right, so I think it's pretty visible, right there. 1, 2, 3, 4, 5 for C, and now you're coming lower again. If you're breaking below this B wave, Of course, you can say, well, what if this is a 1, 2, 1, 2? Yeah, sure, I don't think so, right? That would be a very good thing, but I doubt that that's how they form. And I think that this correction probably has not ran its course yet. It's just getting bigger. So we don't want it to get too big for this fourth wave. I mean, compared with the second, this one was very sharp wave, you know, and this one is already getting too extended. So something it's afoot here. But anyway, it's, you know, it had a tendency to get bullish, but it failed. So, you know, it looked at the moment that it was going to break out in here and do a 1, 2, and it had a chance to do, let's say 1, 2, 1, 2, 3, 4, and 5, right? But it couldn't do it. So you fell apart. So now this is done. This is probably a correction and you're pushing to the downside. And, you know, if you're reversing and you're starting to climb back above the C wave and above 101, then I think you have a lot of chances to say, yeah, it's going to go towards 160, maybe, you know, maybe even higher. But for now, it's a stay and wait. So just kind of dissecting this and telling you what I think about it. Let's take a look at Apple. Close in here. All right, let's see. So Apple, a big move, right? So 1, 2, 3, 4, 5 for the wave 1 cycle, wave 2. I think we're still in a pretty big market, trying to climb in here in this kind of large trend. 1, 2. I think we finished at wave 3 primary in here. So let me go to a 2-day chart. What's going on? Where do I have? I had some overlaps in there for some waves, maybe. Okay. So another 1, 2, 1, 2, 1, 2, 3. That's third of a third of a third. Down in 4, up in 5. You know, 1, 2, 3, 4, 5 for 3. Down in 4, connected with this second in here. And then you have another push higher in this fifth wave. That completes a larger third at the primary degree, right? And go ahead and use some arithmetic scales too, just to kind of, you know, you will see a little bit better why this makes sense. And I think where we are in Apple, we are in this fourth wave. I think that's where we are. We are in this fourth wave that could, you know, spend a lot of time all the way back here towards 120 in this fourth wave, or even maybe a little bit lower towards 110. In this neighborhood in here, if he wants to correct, right? Because you got a bunch of fourth wave in here, 4 and 4, and then, you know, this kind of flat. So, you know, they were trying to rally it, but couldn't do it. So again, 1, 2, 3 is the leading diagonal here in a wave A. So let's see that. So right here, you know, you have, let's say that's A, B, C in there, right? So that's your W combination. So we go W, X, Y. Just connect that. So here's your W, that's your failed X. We never really passed above this B wave. That's exactly what I was talking about before, right? That was 179. So it came very close to it. It looked very impulsive. So big trap in there, and then we might be doing a wave Y. Now, I don't know if this is going to go this way towards 2023, or if it's going to finish a little bit sooner, if the market ends up. But listen, it's going to be very hard to make a bottom in this market without Apple bottoming, I think. I'm just going to have another sip of coffee here. So, you know, we'll wait and see. But clearly a big failure from over there. And, you know, now we're watching, you know, if they're trying to get it below 130, you know, and kind of how that's going to look. Let's see if we go to a 1-day chart, if we see anything in here. So A, 1, 2, 3, 4, 5. So that's our leading. Wave 1 is bigger than wave 3, right? So that's, yeah, I think that's fair. I didn't look closely, but just from a quick visual, it looks like a leading diagonal in wave A. And you go up in this B. I mean, look at this B. Right, wouldn't you think that's an impulsive move? You see, that's sometimes, you know, the market will fool us like that. You just go A, B, and then you drop lower in this C wave. And, you know, I can probably get in here and find, you know, the proper distinctions for the C of W down into 130. So this is the first zigzag. You go up in X near the B wave high, one more time, right? And then we're doing a 1, 2, 3, 4, 5. So, it should, I mean, I don't think a Y wave can finish so far up above this wave W, and I think that something it's going on in here. I don't think it's complete. 1, 2, 3, 4, and 5. I mean, this could be wave A. Wave B, 1, 2, 3, 4, 5 for C, maybe still a bit lower, and then you can complete a Y wave. keep an eye on this. I mean, it looks, you know, it looks complicated. It looks a little bit heavy, just kind of like this one. You got some, you know, messy moves down in here, right? And I'm not trying to pick up exactly where the low is, but I know that, you know, it needs to reverse and show me at a larger frame that things start to look a little bit better. But for right now, it's in a big messy correction, and I think it's in this fourth wave at this degree, right? This was a very sharp decline. You dropped in Apple, very directional, and wave 4 it's more sideways. And it's a pretty good alternation in here, and then you had a big impulse in here in this larger third. So, you know, give it time. I mean, it might finish this year, might finish early next year, but this tells you that maybe the markets are not done correcting. So I'm very curious. I'm going to keep an eye on Apple and to give us any clues, but, you know, let's see if it can get back at least, let's say I would pick maybe 158, if not this guy back in here. And the high here was very close to that 179, so it's actually 176, you know, a couple of points lower than that. But you gotta wait for it. You know, you can't really, it's very hard to kind of get bullish in here unless you're, you know, I mean, there's some decent support, you know, but there's no signs that this is over. You know, we have to kind of respect price and, you know, let us show it a little bit, at least a 5-wave move out of here that looks somewhat proportional, right? I don't like to see this type of stuff because that's usually, you know, B waves. So that's Apple. I'm not sure how many minutes. I mean, I'm 54 minutes. Wow. Okay, let's take a look at Tesla. Tesla, it's on a similar story in here. I mean, you can see, you know, big cycle 1, 2, 3 in here, 4 and 5. So it finishes wave cycle 1 somewhere in 2017, pushes back in a wave 2, and then it does a you know, a big wave 1 with a deep second wave, a pullback. I think this is a 618 pullback, and then it goes up here, triangle 4th. I can kind of see it in here, pushes up in 5th of 3rd. So 1, 2, 3 again, A, B, C, D, triangle in 4, final move in 5th wave of 3. And just like Apple, just like you saw Apple, I think we're in a complex 4th wave. Now, I mean, look, I put some time fibs in here, and I don't talk a lot about time fibs, but they help me identify, you know, if this correction still has a lot to go, and I think it does. If it matches with the second wave in here, I think, I mean, 100% of it will be, this is 2025, what is this? You're looking at 2023 October, you know, where you're going to have basically, you know, an end to the Tesla decline, which is another year of choppy price action without bullishness. Could that be true? What is that going to do to consumer discretionary? And, you know, you're looking at prior 4th waves in here like that. So somewhere, and I know we're talking, I mean, I put a chart on Twitter as well. What if this is a head and shoulder? You know, that looks kind of like that, right? That means that maybe it can drop even lower than that to this prior 4th wave towards 128. I mean, we're trading 223. That would be a pretty massive drop for Tesla. But, I mean, look, left shoulder, right shoulder, and things are not looking that pretty. But I'm going to stay with the support for now. Let's not panic in here, right? Let's just kind of give it time to breathe. And again, just it looks like just a simple correction. This looks like a 3-wave move up in there. So it's either a B wave or a wave X. Maybe again, leading in 1 or in A, B, 1, 2, 3, 4, 5. So W, X, Y, A, B, C for W up in X, and then maybe another A, B, C now. See, I think that's what's going on. So let's do that. W, X, Y. I'm gonna do a combination in here and then C. W, X, but still I have a problem with the fact that, so it could be complex, guys, right? Unless it takes only 618 of the second wave duration, and this would be your 1, 2, 3, 4, 5, so you would be your A, B in here. Does this make a new high? Not sure, but anyway, so something like that, which means there is still a C wave developing in here. If this is a wave 1 and that's a 2, that means a 3, a 4, and a 5 still to complete a C wave decline in Tesla, and then maybe we can look to the upside. But no rush, you know, you got to get back above, you know, 313.80 to start to get more bullish on Tesla. Until that happens, things are a bit nasty. I mean, sure, you can always trade bounces from here for a few, points and stuff, but it doesn't mean necessarily that Tesla will start to go to the moon until you're actually breaking above some of these levels. So it's all a matter of kind of risk control and see, what your strategy is about how you're trading these. But that's kind of what I see in Tesla at this, larger degree of trend. I think this fourth wave is in progress, this fourth wave cycle. Okay, let's see what's next. We're going to try to close here. Etsy, very interesting. On Etsy, I took a look and I broke it into, by not using a log scale, just to kind of show you a little bit how it looks. Right? So you can see 1, 2, 3, 4, and then up in 5, and then a big drop. And let's place the log scale, right? And here is where we are. We go to a week. All right, I messed something up because I was trying to grab this primary. Let me just do that really quick. All right, there you go. I like stuff to be kind of clean and for them to be labeled at their lows and at their highs. So again, 1, 2, large third, 4 and 5 for the wave 1. Nice ABC in here in a wave 2. Beautiful pullback. Then another wave 3. Now, see, you're gonna say, man, this fourth wave here, it's it's very small, but again, if you kind of go on the arithmetic scale and look a little bit, I don't know, I think it matches this with this second wave, right? It doesn't match in time. It's a little ugly, but the size of this pullback tells me that that's probably what it is, and you've done a wave 5 out of there, and now you're correcting. Don't have another alternate in here, and I'm slowing down here with my presentation because I'm thinking while I'm talking if there was any other way where I could place another fourth wave and we have overlaps. So it's not, you can do a 1, 2, 3, 4, and 5. I mean, I guess that would be one way to do it. Listen, I'm not going to go into it because it's going to take time, but basically this primary counts, move them like that, 1, 2, 3, 4, and then up in 5. I don't have a proper subdivision for this wave. That's the problem. So anyway, I think I like this, and I wanted to kind of give you this exercise as well. But look at the pullback in here in Etsy, and let's take a look at the 2-day chart in here, and you can see, a beautiful ABC correction, then a final fifth wave higher, and then we're done. We're breaking below this fourth wave, and then we correct. So you go in a 1, 2, 3, 4, and 5 for the wave A. Then you go up in B, and then a 1, 2, 3, 4, and 5 for C. And, I talked to the members about this as well. This is a beautiful correction in here. And it looks like you broke above these levels, so we should be bullish. So unless this is an X wave and we're falling apart, just like we talked before, right? This is a pretty good indication that Etsy could rally. Could it rally under the current market conditions? It's a hard one, but it's starting to have some evidence that it's possible, and it could be doing just that. But I think there's a major low in place in Etsy at 66. We're trading 110, so take it for what it is. But if you start to break above a 163 in here, I think it's a good indication that you can push much higher. So I just wanted to kind of show you this decline in Etsy and kind of how it looks. And you came back toward this resistance, now support, right? Like right there. So pretty good move in Etsy. Is this a 1, 2, 1, 2, 3, 4, and 5, 4, and 5? So continue to kind of watch this. It's an interesting formation kind of in my book. All right, so that's Etsy. Let's take a look. I don't want to go CGC, Cron, Tilray. These guys had a big rally yesterday and then completely reversed today. Something that I told the members, last night in the last night's video. I said, guys, don't trust that move. That looks like crap. It's probably gonna reverse on us. Okay, so that was Etsy, and then I got a couple of more things to show you, and this is here. I said I was going to take a look at gold and then India, and let's take a look here. All right, so here is the gold market, and it's I've had this as an ABC, but since we've done almost like 7 waves in here, 1, 2, 3, 4, 5, 6, 7 waves are corrective, at least to this moment. I think it's better suited as having this as a W Then you go A, triangle B, up in C for a wave X, and then you do 1, 2, 3, 4, 5 for a wave A. You go up in a small B wave, and then you do a C wave decline. And you know, if this is done, you know, you're looking for this to continue to push higher, right? You want it to get above this B wave, and that would be what I would look for. See if you can get above 1807. See if you can get back above 1879, and you know, start to move at a larger degree, right, in this kind of larger fifth wave. So if that's a 1, 2, then you have 1, 2, 3, 4, 5 in 3 WXY for the fourth wave at the intermediate degree, and then, you know, look to see if you can kind of climb higher in that fifth wave. And you know, we haven't made a new high in here in this X wave, so it's fine for a kind of complex correction. You know, I was thinking flat, but since this move in here, it's, you know, I mean, it's pretty impulsive, but it doesn't, you know, it doesn't look like you have a clean five-way structure. It's more than that. On the other side, you know, you got to be careful because you're still in a big downtrend, right? So what if this thing, it's a, you know, it's a big double bottom in here, and this is a B wave right there, and that's a double bottom, and then you got to do a you know, a big, you know, something like that, like a big fourth wave in here. 1, 2, 3 in gold, 4 and a small 5. So, you know, it's always possible. You know, what would be the catalyst for gold to start pushing the upside? Well, you know, I don't know, Federal Reserve cutting rates and stimulating the economy. You know, crazy stuff can happen. You've seen it before, but I'm always kind of looking, if, you know, you're in a downtrend, you got to break this downtrend and start to push higher. And so far, you could be rejected, and this thing could be, you know, the C wave can still unfold lower and or become something much, much larger. So just kind of be careful in here. I don't know if I really trust discount that much, although you had a pretty good rally back from these levels, but it's not enough for me to convince me that we have a low in gold. So that's kind of where we are on that. And then let's take a look at India 50 in here. I'm going to close off with this. This has been a you know, a pretty nice count. So let's see, let's let it load up. All right, here it is. And I've talked about it last week as well. So just it's a pretty solid market. We haven't it's kind of correcting sideways a lot. You know, big impulse. Then you have A, right? 1, 2, 3, 4, 5. B, C wave in here. X to the prior B wave. A, B, C for a Y. Then you climb higher here in an impulse or an X wave, right? That's the question. Is this a WXY, XZ, or, you know, you're beginning the next impulse? Well, what we know, and I've talked about this because we were watching the markets from here, we made a fifth wave, we were watching this correction unfold as well, and then you're coming back lower in here. I mean, it looks like this wave A is done. You're pushing higher in this B wave. Could be already done because I see a 3-wave move there, right? So either that or a little bit more, but then it should be followed by another decline here in the C wave of 2. And then, you know, a push to new high. So very interesting. I mean, I would definitely try to stay away from guessing in here. It's a very sideways correction in this Indian stock market, and it's not, you know, it's kind of very hard to let's say pick a good trade, at least the way this looks at the moment. I would definitely wait until, you know, these levels get taken out here, 18,100, 18,187, something like that. Otherwise, you know, you're going to try to pick some of these corrections and they could become a bit more complex in here. You know, you can have a B-wave triangle. So it's still in a nowhere's land. But that's kind of what I'm watching at the moment, you know, to see if we're going to get, so far we identified pretty well this decline and with the B, and now, you know, we'll see if we're going to get a C wave out of here. But, you know, if it's again, it could be wave Y. So this could drop a little bit lower. Right, and it could be like that, right? So this could be wave A of Y, A, B, C, and it doesn't have to be a wave 1. This is an X. So W, X, Y, X, A, B, C for Z wave, and then you push higher. Hopefully that makes sense. So guys, this was a very long video. Thank you for watching. I hope you can kind of get through it. You know, we'll see what comments I get on this, if I, you know, help you in any way, or if it was, you know, super annoying me talking in here for non-stop, but maybe break it in a couple of pieces, you know, half an hour at a time or 20 minutes at a time. But I wanted to kind of go deep into this Elliott Wave analysis in all these asset classes, and I wanted to identify corrections and show you how I'm thinking about them, what I'm looking for, and hopefully, it is helpful. So once again, I appreciate you being here. Don't forget to subscribe and like, and I will see you on the next one. Good luck trading next week. Bye-bye.